nothing to do with any of this. Hey, everybody, welcome to our weekly series here in April. I almost said May. Wow, I can't believe you guys. Can you believe we talked about this at the end of last month, and here we are already.
Time flies by.
Yeah, time flies by when you're having fun. So as you guys know, we've been talking all month long specifically about the C.A.R.E.S Act, different aspects of the C.A.R.E.S Act, and today we're going to chat about mortgage forbearance and taking a vacation from your student loans. But before we dive into that, Tim, the update on PPP and the EIDL loans, I know that Congress funded it again, and there's some additional money there, but there's some caveats to that. What do you know?
So you're absolutely right. Last Friday, President Trump signed the interim finance bill, which put another $310 billion of available funds into the PPP program, and another $10 billion of loan fees. So crazy, $10 billion of loan fees. And then an additional amount of money, $60 billion, I think it is, into the EIDL program. While the SBA has not said that they've used up all of that money yet, they said that they've received enough applications to be able to use up all that money. So again, it might already be too late. The banks, especially like Intuit Bank and some of the online banks, are still saying get your applications in. So definitely go for it, especially the smaller financial institutions may have some funding left over because they were earmarked for 30 billion or 60 billion, depending on the size of the financial institution. So there might be some money left, but I bet you they have more than enough applications to eat up all those funds.
Yeah, I heard a friend of mine finally got Wells Fargo to give them some sort of an answer. I know that Wells got some heat for their, I think that they were just overwhelmed and maybe weren't expecting the amount of applications that they got, but they finally got an answer from Wells. So hopefully those people who are in line will continue to stay in line and they won't have to redo that. Is that your understanding?
Yeah, I still have heard nobody from any of the larger financial institutions, Wells, B of A, or Chase, that has been successful in getting a funding loan. Most of my Wells people are getting a daily email that says, you're still there, and no word on funding. We have a little over 60 clients now that have been either approved and or funded for their PPP loans now. So all the regional banks, all the little banks seem to be knocking it out of the park.
Got it. Good. I'm glad I'm partnered with a local bank, right? It's important. We talk about relationships. So Lisa, we're going to dive into mortgage forbearance and student loan. I guess I'm calling it a student loan vacation, but that's not really what it is. It's student loan forbearance as well. And my understanding is that it only applies to federal student loans. Is that true?
Yeah, the C.A.R.E.S Act covers your federal student loans, 3 federal student loans. It's the direct loans, the federally held, the federal family education loans, or the FFEL loans, and then your Perkins loans. That's covered by the C.A.R.E.S Act. They are recommending that if you have private student loans, to still reach out to your servicer, I guess the person that you're making your payment to. So they are not obligated, but they may, by election, be providing you with some additional benefits or similar benefits to what you can get through the C.A.R.E.S Act.
And so what does it look like in your knowledge to ask for a student loan forbearance?
So student loan forbearance, we already have that to some degree, because a lot of people have their student loans in deferment, right? So people are in school, as long as you're enrolled, your loans are in deferment. They are still accumulating interest, which is always such a lovely, shocking surprise when you go to start paying on that student loan. It's like, I borrowed $5,000. Why do I owe you $7,500, right? So this whole type of thing kind of exists within the student loan arena already. What the C.A.R.E.S Act has done is it's allowing people to truly do much more of a forbearance, in that the interest that is being accrued during this period of time that you are in forbearance on your student loan is actually waived. So if you find yourself in the position where you can continue to make those student loan payments, everything that you're paying is being paid to your principal.
Got it.
Different than what it would be if we didn't have this going on. So even if you're still planning on paying on your student loans, we actually can provide you with a template of a letter that you want to use to send to your student loan servicer and let them know that you're going to continue to pay, but that you want to make sure that all of the money that you are paying is going to be put to your principal balance. So it's actually a great opportunity to maybe knock some of that down at this point in time.
So even if you're not putting your loans in forbearance,
right,
you can make the payments that are applied to it are to principal only. So essentially, they're saying no interest period.
Correct.
Right now.
Correct. On federal loans right now.
On federal loans, and how long does that last?
I believe it was 6 months.
Okay.
One of the other things that's been suspended. So, of course, if your loans are in deferment, that, it shows up on your credit report. It actually shows up like you've actually been making your payments. That's what's going to happen if your loan goes into forbearance on a student loan as well. So that's going to continue. I know that there's a lot of people who have student loans that are going to be forgivable. So you work 9 years in a business or a school or something like that, and you pay on your student loans, and then at the end of 9 years, whatever you have left over as a balance is actually going to be forgiven. So during this 6 month period, even if you stop paying on your student loans, that 6 months will still be added. You're not going to lose your 6 months.
Wow.
So if you have to stop paying, you're still going to get those 6 months credit towards that 9-year obligation timeline of being able to have your debt forgiven. So that applies to people who are doing it that way. I'm just kind of looking here at my notes here. So it suspends and waives interest until September 30th on student loans. And then there's a couple other things, like if you were in school and you had to withdraw from school and you got a student loan, you can actually go ahead and take that money and give it back to them, and you're not going to have if you withdraw from school during this period of time due to the crisis, you can cancel that direct loan for that period. So you don't have to take that student loan and add that to your debt if that's something that's happened to you. I would imagine that probably is going to project more to people who were getting student loans for the summer, perhaps, right, because everything is kind of shut down. So that was a big thing that I saw, was that the timelines were going to stay included in that. The other big thing that happened is if you did not file your taxes before March 13th and you are in default on student loans, what they do is they take your tax return and they apply it to your student loan debt. Mm-hmm. That actually went away. So if you filed your taxes, you can actually contact the IRS and you can go back to them and say, hey, you took my refund, I want it back because of what's happened.
Got it.
So if you file now, you get your money. You get to keep your money this year.
So how can I contact the IRS, Lisa?
I was just going to say, how do we do that?
Well,
right now, I'm
not entirely sure that that's going to be the most expedient process. I will find out. Okay. How do you contact the IRS with something like that, Tim?
Yeah.
The main line to the IRS, which is 1-800-829-1040, is currently shut down. The IRS said they're bringing 10,000 employees back to try and man those lines. But as of this morning, because I tried that number, it's still shut down. So in the next few days or so, it's supposed to be opening back up.
Okay, perfect. So
these are the 10,000 employees that they laid off when they had budget cuts, and now they're like, wait a minute, we need to go back.
Jared, as a taxpayer, it's even worse than that. Not laid off, just not working.
Okay. Right. They're not put on the schedule. Got it.
So also, Social Security benefits are not going to be garnished for the next 6 months if you have past due student loan debt, and wage garnishments if you're still working and you've been having your wages garnished to pay back your student loans. then that's going to stop as well, or it's going to stop temporarily.
Got it.
So if you can pay something, it's a great opportunity to start hacking away at some of that student loan debt.
Yeah, with no interest. Yeah.
Yeah, with no interest. It's a great opportunity. So
now diving into mortgage forbearance, which if you're in the real estate community and you're watching us and you're a realtor, you've heard and probably seen a lot of this. You've seen, I've personally seen many different various thoughts around it. People saying you can forbear, some people saying you shouldn't do it. Some people, I mean, the opinions are all over the place because I'm sure it just depends on the advice that they're receiving.
Sure.
And the advice that you have for us today could change by the end of this call, or the information that you have today could change by the end of this
Yeah,
call.
honestly, in the next 45 minutes, something actually might change. Everything that I am going to tell you is now going to be different, which is a possibility. It's been a very volatile situation for everybody. So,
Right. So
things are coming up all the time.
So I guess just in a Reader's Digest version, what is mortgage forbearance?
Well, mortgage forbearance has always been an option. This is not something new that was created by the C.A.R.E.S Act. It's always been an option. And the idea behind a forbearance before the C.A.R.E.S Act, so independent of that, is that it is a temporary cessation of making your mortgage payments due to a specific situation. And you would then contact the servicer. The servicer in this definition is a person that you actually make your payments to. And so it's not your loan officer that got you your loan. In most cases, it's actually a different company that's the company that you need to be dealing with everything that we're talking about. And so what would happen in the past was that it would show up on your credit report. It would show as a forbearance. It would potentially impact your credit scores. But it was kind of the last resort. This is what I need. I need a break for this period of time. And the only option to repay that forbearance was to pay that lump sum at the end of your agreed upon terms. So let's say you had agreed to not make your mortgage payment for 3 months. Come month 4, you actually owe the bank 4 months worth of mortgage payments. So obviously not a great solution to someone who's in a financial crisis, but it's always been an option. When the important thing to know about forbearance is it's not forgiveness. It does not mean that someone is going to go ahead and make your mortgage payment for you. It is still your legal contractual obligation to make that mortgage payment. That's what you agreed to when you signed that note and the deed of trust. That was your promise to the bank to repay your debt. With the C.A.R.E.S Act coming out, there has been some changes to the existing forbearance piece, and kind of how the exit strategy piece is going to show up is kind of been when this first all came out 30, 45 days ago, whenever it passed, we really didn't have any idea what that exit strategy looked like. And we now have a better idea as to kind of options on the back end. It's going to be very interesting to see what happens, but we have a much clearer understanding as to how people are going to be able to get out of this. Basically, the bottom line is that the C.A.R.E.S Act says you can go into forbearance for 180 days. There is no barrier to entry. And what does that mean? You basically pick up the phone, and after sitting on hold for 4 or 5 hours, you talk to your servicer, because again, they, as well as the unemployment, as IRS, as this is like they were not staffed to handle any of this. And you pick up the phone and you talk to your servicer, and you basically, all you have to say is, I want to put my loan into forbearance. You do not need to prove that you've been impacted by the virus. You do not need to prove that you're no longer working. You simply you just say, that's what I want to do. And they by law have to grant you the forbearance. They are not required to ask any documentation. They simply go ahead and they send you documents agreeing that you are going to put your loan into forbearance. Now, I haven't seen this, so of course, you third party, whatever, but I have heard that it is very, very important, if this is your last resort option, that you read very, very carefully the documents that they send you, because every servicer is interpreting and managing this differently. And so every servicer is going to be sending you different types of documents. And I have heard that there are documents in there where you are basically giving control over the ownership of your home to your servicer.
Nice.
Not a great thing. I've actually heard of people saying, I got this and I took it to my attorney and he said, there's no way in hell you're signing this.
Right.
Now, is that, if you were to do that, is that control of your home for 180 days or control over your home for the rest of the term? I mean, what does that mean? Who knows?
Every servicer is different.
Right.
Every servicer is different. So if you are, my recommendation is, first of all, my recommendation is don't do it if you don't have to do it, right? If you can't make the whole mortgage payment and you can make part of the mortgage payment, it's better for you to do that, because at the end of the day, all this deferred debt still belongs to you. And at some point in time, you're going to have to be paying for it. And it's better to be able to move forward with your financial situation when things settle down, to be as not as far behind as you possibly can be, right? But if you do need to do the forbearance, it's there. It is designed to make sure that we don't have people losing their homes. I highly advise that you talk to a licensed professional, whether it's an attorney, whether it's a CPA, whether it's someone that's in your sphere of influence that you can trust, a financial advisor. Have someone else take a look at these legal documents, because I know if I did it and I'm in the business, I would still take it to my attorney to have them look at it, because I don't read legalese. I can't interpret what that's going to look like. And I want to be a fully informed consumer before I sign something that's going to impact my home and my mortgage and my credit.
Now, your understanding, if I ask for mortgage forbearance, I get it, I do everything right, I sign the docs.
Yep.
That reported to the credit bureaus, could my credit score be impacted by this?
So the answer, according to the C.A.R.E.S Act, is no.
Okay.
That the servicer cannot report you being late, and that your credit report should not show any mortgage lates. However, it will show that you were in forbearance. And why is that important? Well, it really is important in regards to your options once this is all done. Because one of the things that we've heard about, and we'll get a little bit more into, kind of exiting this whole thing. One of the things that we've heard is that, and there's been no final decision, so this is what we've heard, is that Fannie and Freddie will not allow you to refinance or to get a new loan for 12 months after you finish your forbearance. Not that it's going to negatively impact your credit scores, but they want to see that you are financially stable and able to go ahead and make 12 months worth of mortgage payments as agreed before they'll consider you a good credit risk.
Right, because a forbearance would say that you have some sort of financial insecurity.
Some sort of something, right.
And that maybe you couldn't pay, you're not good for it.
Possibly. I mean, that's yet to be determined. This is the challenge with this, is that when people think, oh, this is a great opportunity for me to not make my mortgage payment and maybe take that money and pay down other debt, and that would be wonderful. But at the end of the day, I can tell you, like, what's going to happen to you if you don't pay your credit cards, and I can project that. I don't have answers for what this is going to look like when you come to me and all of a sudden interest rates are at 2.75 and you're 3 months out of forbearance and you have a 4.5% interest rate, and you say, oh my God, I love my home, I'm back to work, everything's great, I want to refinance. And I have to say to you, yeah, your credit scores didn't get messed up, but this is what they've decided in regards to the guidelines that they haven't shared with us yet. I can't help you.
So what do you see people that decided to take that monthly mortgage payment and use it to kind of build up a war chest for their next, purchase, and then they come to you and they go, "Hey, I finally got enough money for a down and that kind of thing," and
right.
You say, "Talk to me in a year."
Right. And I please understand, I don't know that that's how this is going to play out, but my bigger concern is I don't know how this is going to play out, and that piece hasn't been determined. This was, again, 7 days took them to write this bill. There's a lot of stuff that was not detailed out. It was just like, let's get this done. Let's get people taken care of. And then what do we do with it? How do we manage this on the back end?
What does history show us about this? So if we were to compare 2006, 7, 8, or the rise in short sales REOs,
right?
What did we learn through that? Because I feel like even though this is two different situations, history tells us something about how the banks are going to handle this, or how this is going to be looked upon in the future.
Yeah, I think that I think this happened so quickly, and they went so drastic with offering this, and basically the thing of saying there's no barrier to entry, because they wanted people to be taken care of right away. And I think that that is a direct result. I think 2008, I don't think that this would have happened from the mortgage standpoint if we hadn't experienced 2008 through 2012. Because the lending industry and Fannie and Ginnie and Freddie, they all don't want to own your homes. This is not what they want to do. They would rather have you make your mortgage payment. They don't want to own homes. And so very aware of the situation. I think that this is why we got this. I think also everyone kind of very much sees it as a temporary situation. Stock market is still doing well. I think the stock market is optimistic that once things get back rolling and things are going well, I think that what we're going to find is that the bigger concern is what's going to happen when you are ready to come out of forbearance.
Yeah.
I think that's where we're going to, so you think sitting on the phone for 3 to 4 hours now with your servicer is a problem, just to tell them you don't want to make your mortgage payment? What's it going to look like when you get to spend 3 or 4 weeks on the phone with your mortgage servicer trying to let them know that now I want to start making my payments? How am I going to repay my debt? Because you still owe the money, right?
Right.
So,
and I've heard many, and I know that you talked about this a little bit, but I've heard many different ways of repayment, none of them being very clear. Like, am I paying it? Is my loan term still the same term, or am I adding it to the end? Am I adding incremental to the payment it gets so confusing. And then if you're in the real estate industry and you remember the bank's communication during the short sale times, like that's why it took so long for you to close a short sale, is because there was just millions of people in the same boat.
Right. So here's the good news. Everybody, and so first of all, the CARES Act covers all federally backed loans, which is going to be conventional, FHA, VA, and USDA. Okay. Jumbo loans are not federally backed loans. So if you have a jumbo loan, you need to talk to your servicer, because you are technically not covered under the forbearance piece. Okay. If you have a first and a second, be very careful of that second, because it's not a federally backed loan. You are not covered under the forbearance piece. So what everybody has come out, so Ginnie Mae, who manages FHA and VA, and Fannie and Freddie, and USDA is kind of their own little offshoot, but they're following along with everybody else. They have all come out and they have all said that no one is going to be required to make lump sum payments when they start making their payments again. Ginnie Mae, FHA and VA, has been very clear, and they've come out and they said, we will not be negotiating with you to spread those payments off. But basically what we're doing is we're saying, however much money you owe us, we're attaching it as a second deed to your property. Start making your payments on this date. And when you sell or refinance your house, you're paying us back.
Got it. Okay.
Now, Fannie has that option. Fannie and Freddie have that option. They also are exploring an option of, and this is where the qualifying piece comes in. This is where that log jam is going to happen. This is where the concern is, again, from the standpoint of they don't have the manpower. Like, they just finally finished laying everybody off from 2008, 2009, right? Everybody who is in forbearance has to go through the pre-qualification process as it stands right now, if you have a Fannie or Freddie or USDA loan. And you basically you have 3 options. One of them is going to be what Ginnie Mae has said they're just going to do across the board for everybody, which is going to make it fairly simple. If you have an FHA or VA loan, it's very clear as to what's going to happen. Not a lot of paperwork, not a lot of time. Right now, as it stands, one option is based on your income, based on your debt to income ratio. Fannie and Freddie can say, hey, we are signing an agreement and we're now increasing your mortgage payments for however many months you work with them and stuff like that. And so now your mortgage payment was $1,500 before this. And now your mortgage payment is $2,500 if you can afford it for X number of months to go ahead and pay this back. Okay, that's option 1. Option 2 is what Ginnie Mae is doing, which is taking however much you owe us and throwing it on the back of the loan. And then they'll just get their money when it refinances or pays, they sell the house.
Do you just on that option 2? So if we think about that as a second almost, are you paying interest on that?
No, you should not be paying interest on that. It should be essentially what a silent second is. It will not be forgiven in any way, shape, or form, but it also should not be accumulating any additional interest. And then you also don't make a payment on it. So you basically just have to deal with it when you refinance. And I would imagine if you choose to stay in your home and refinance, and depending on how things play out, and you want to take advantage of lower interest rates, I am guessing that they're not going to treat it as a cash out refinance. That will be able to be rolled into a rate and term refinance. Normally, when you pay off a first and a second, it's usually considered a rate and term, or a cash out refinance. So I'm guessing that, and the reason why that's important is because it gets you a better interest rate. Mm-hmm. Cash out, you pay a higher interest rate. Mm-hmm. The last option, which I would think would be the longest process, would be an actual loan modification. And I would imagine that the banks would veer away from that as much as possible, because it's just, if this lasts for 4 or 5 months, and let's say you have an average of, $2,000 a month payment, and they're not charging you interest on that, you're just, what your payment is. And so let's say you owe them $10,000, and so it's not enough money to have them do a full blown loan modification. I wouldn't think. That just a lot of time and energy to chase after a $10,000 modification.
Yeah.
From that standpoint. And a modification, the difference between a payment agreement and a modification is basically modifying the deed of trust and the note. You're actually changing that.
How many modifications did you hear were actually successful in the last downturn?
Loan modifications were a lot harder. I think the people that had like option arms and things like that, those were the loans that got modified. Wasn't necessarily your Fannie, Freddie, FHA. Those were short sales. Those were foreclosures, that type of thing. So not a lot of loan modifications I saw. Yeah. And then there's credit consequences for loan modifications as well. So requirements.
Think about just in the bank's aspect, if you are a federally backed loan, what is their incentive to modify your loan? Because they're getting their money anyways, right?
Right. It doesn't really make any sense. I think that if Fannie and Freddie choose to follow Ginny, then the process will be fairly clear and fairly easy. The challenge will be if you just bought your house and you put down 3%, which is allowable on a Fannie or Freddie loan, you may not have the value for a while. That's another thing that you need to be very aware of. If this is something that you need to do and this is your exit strategy, and you think, oh, well, I'll just wait 12 months if I have to, and I'll refinance and I'll pay it off and I'll probably get a better interest rate and the whole 9 yards, your loan to value is going to come into play there as well. So you don't want to forget that piece of it as well when you're kind of trying to determine your options.
Wow.
So let's say in any crisis, there tends to be some sort of fraud activity.
Oh, you think?
Yeah.
No, we're not at all worried about that.
People taking advantage of the chaos, right?
Right.
What have you heard happening in the industry when it comes to fraud around forbearance?
A couple things. Again, I've only heard of them. I haven't physically seen any advertising or whatnot. I have heard that some realtors are saying, hey, buy a house and you don't need to make your payments. Right? You can buy a house and go straight into forbearance.
Wow.
Which technically you can. Now, be very aware of this. The most important payment you will ever make on your entire mortgage is your first payment. Because if you don't make your first payment, it's called a first payment default. And in this particular environment, your loan may not have been sold to Fannie or Freddie or Ginny by the time you have to make your first payment. And if it's still owned by the lender, they have the right to call your note due and payable immediately and start foreclosure proceedings. You are not protected under the C.A.R.E.S Act until your loan is actually sold to a government agency. So I've heard of that going on. I have seen absolutely nothing in our community about that, and nor would I expect to. But I have heard that that is kind of like like buy a house and you don't have to make your payment. I've also heard of situations where like car dealers, things like, again, nothing here in our area that I've seen, just hearsay, but car dealers are giving some great deals on cars right now. Same thing, you don't need to make your house payment, you can make the car payment. the end of the day, you still have to make the house payment at some point in time, or you're going to lose your home. So those are a couple of fraud things that I've seen. I think probably the biggest concern, I'm encouraged because it does not appear at this point in time, even with unemployment spiking the way that it did. I've got this amazing graphic, which is like a little video, which goes along and unemployment, and then employment goes up, and it's like this, and unemployment goes up in the depression and the recession, and all of a sudden it's 2020 and unemployment does this. Like, you can't see my hand, but unemployment's going like this, like it keeps on going up and up and up and up. And it's like, whoa, it's kind of like really super intense. And so even with unemployment numbers where they are, the forbearance requests, I believe, are coming in lower than what they anticipated. And I can see that in the mortgage markets. I can see that in interest rates. Interest rates have really settled down. The communication coming from the experts is that they're encouraged by what the feds are doing. They're managing their buying of our debt effectively. They're not buying too much. They're not buying too little. Interest rates, honestly, for the last 2 or 3 weeks have been in the same exact range. Whereas in the middle of March, we were like all over the place, like every day. Like, I'd see a swing of 1% in an interest rate in a single day. And that the volatility in the market was just insane. So things have definitely settled down from that standpoint. So they're getting a handle on that. I think that forbearances, I think that the industry and the CFPB have done a great job about educating people about what truly forbearance is, that it's a tool that's important to use if you absolutely need to use it, but it is not a forgiveness situation. It is not a free ticket. It is not a free ride. And so I'm encouraged by that. I'm starting to see some stability coming into the market in regards to that. And we're anticipating that's going to continue along that route. And a lot of it just depends on timelines and how things kind of just play out over the next couple of months.
So if the forbearance hasn't ticked up as maybe they expected, or it hasn't been crazy, do they track foreclosures or defaults? Sorry, people not making their payment. Like, have we noticed anything there?
So here's the first thing: if you've signed a forbearance agreement and you've now decided that it's maybe not the best thing for you to do, today is the last day for you to make your April mortgage payment without having it impact your credit scores. So if you choose to cancel your forbearance and you choose to make your mortgage payment, call your servicer today and get that done. Okay, so that's because unfortunately we're falling on the last day, but today's the last day. As of tomorrow, and you have signed a forbearance agreement and you choose to cancel that, you are now going to show a mortgage 30-day late. So that's going to drop your credit score about 150 points.
Wow.
And that just stays there and it's much harder to get that 150 points back. I don't think that we're seeing nearly as many forbearances. I think people are learning about it and they're understanding, to the point of like they're having people review these documents that they're getting to do the forbearances and things like that. There was the part of the challenge right now in the mortgage industry is that we've never had this before. Like 2008, you kind of saw it coming and it kind of played out over 5 years. This is really not seen as that type of a situation. It's a single event that's impacted everybody that everyone assumes has an end in sight.
Yeah.
Which it's an external type of a thing as opposed to internal. I think probably that's a great way to describe it. 2008 was internal from the mortgage industry and the real estate industry outward, which impacted the world economy. This is an external event that's impacting the world economy, and we're all just kind of dealing with it in our different categories and businesses.
I would say too, they pumped a lot of money into the economy to give people the ability to continue to make those payments.
Yep.
So the biggest stimulus package ever.
Right.
So I think people still have the ability to do so for now.
Right.
It's still been a short period if you think about it.
Yeah.
Who knows what happens if it goes on longer.
So what does the crystal ball look like then?
Pardon?
What does the crystal ball look like?
Yeah, Lisa, where's that crystal ball?
Oh, my crystal ball, the one that I walk around with and retire to the Cayman Islands, and I don't have. Oh, there it is. It's on his desk. That's where it is. So, to your question in regards to foreclosures, there's a 60-day hiatus on foreclosures.
Okay.
So if you don't go into forbearance and you don't make your mortgage payment, then in 30 days they'll start foreclosure proceedings, which is a 120-day process.
If you're a government-backed loan.
Right.
If you're a jumbo loan, Anybody. Oh, even Jumbo, you can foreclose.
Right.
Nobody's being
Oh,
foreclosed.
yeah. So there's a foreclosure. Well, actually, you're right, Jared. I think it is over just federally backed loans, the foreclosure hiatus or the stay. Thank you. Yes, I think you're correct. So if you can't make a payment, it's really important that you get into forbearance because at least you are going to not have that impact your credit report until you can kind of work things out. If you choose to bury your head in the sand and just say, oh, well, they should know shouldn't have to make my mortgage payment because of COVID, you're going to get a mortgage late. And in another 30 days, they're going to start foreclosure proceedings. So you really have to take ownership of communicating. And one of the things that I would recommend is that if you're going through this process, that you start a little booklet or binder or something like that. And every single person you talk to, you write down the date, the person you spoke to, what you spoke about. If there is a call ID number that goes with your conversation, you write down the call ID number, you write down the time that you spoke to them. Because when you make that next phone call, you pick up the phone and you say, hey, Joe, I spoke to Mary on Tuesday, April 14th at 4:15 p.m. This is our call ID number, and this is what we discussed. It changes the dialogue with Joe because he knows that you're on the ball and you're keeping track of what's going on. That's going to be vitally important as you go through the process of starting to make your mortgage payments again.
I've noticed a lot when I go in to make credit card payments or just normal bill payments that it seems like almost every single bank has a link if you're having issues, financial issues, and you need to report that to them, that you can do that easily. So maybe check online first, start there and see if your servicer has a way for you to report that quickly so you're not spending hours and hours on the phone.
And I've also seen I know that it's not part of the CARES Act, but I know that a lot of banks are like, if you have a car loan with them and you need to go ahead and skip a car payment or skip 2 car payments, again, picking up the phone and calling, they're going to work with you. They're going to figure out how to make that work. And 9 times out of 10, they're probably not going to report that as a late. They're going to help you figure out how to maybe put that payment on the end of your loan or something like that. So again, I really feel like, my first inclination would be if I needed help, maybe I'd be a little bit embarrassed because I need help. But at the end of the day, we're all experiencing this financial crisis at the same time. And so it's important to not bury your head in the sand. And I say that a couple times because being proactive about this and just saying, hey, this is what's happened, and everybody this is a difference between 2008 and now too, is that everyone's like, oh, well, we're all being impacted by this external force, as opposed to, oh, you bad person, you got a bad loan and you're a bad person type of a thing. So it's a different energy that I'm getting.
And at the end of the day, your bank does not want to own your home, does not want to own your car. So talk to them. Yeah.
No. They want you to just make their payments and they want to work with you to get that taken care of.
Yeah. Hey, Tim, we need you now.
Good question.
I know you've just been sitting there looking.
Jared.
Hey, so Mitchell Ross has got a question for us, and I think you can help answer it. So he says, this might be an off-topic question. I'm a sole proprietor, never done any draws in the past. What is the best way, or what is going to be accepted way for me to document my payroll expenses once I get my PPP loan funded? Should I just write myself a check for the payroll loan amount?
So they're not gonna measure that based on draws. So you don't have to transfer the money out of your business account into your personal account if you're doing it right and keeping all the business stuff separate. It's going to be kind of on that net profit calculation. So the SBA guidance and the loan documents that I've seen for the PPP sole proprietors have basically said keep track of your income and expenses. So the answer to that really is good bookkeeping, skills from the date that the loan was funded till that 8-week period after. And then the lenders, of course, are required to document that to make sure that they've underwritten the forgiveness portion of the SBA properly. So I anticipate, and we haven't seen it yet, but I anticipate that your lenders will actually ask you kind of like a mini audit for the, what expenses did you really pay? And, can I see a a few invoices or, bills for the, ones that you have recorded and things like that. So it really is going to be on that net self-employment income.
And keep in mind that only a portion of the PPP, the bills that you would pay would be forgiven. So, for example, like I can't go and buy that new Lincoln Aviator that I've been looking at and then say, oh, it was part of my payroll. It's forgiven through the PPP, correct? It's utilities, rent, payroll.
Yeah, so the measuring stick that they look like they're going to be doing is the kind of IRS guidelines, which is ordinary, necessary, and reasonable. So yeah, unfortunately, the navigator is, out of the term of reasonable.
Not reasonable.
In an 8-week period. Hey, we give you this loan, you buy a car, and therefore we're not going to let you pay it back.
Right. Michael's not getting that piece of art, is he?
He's not. Not with PPP loans.
There you go.
So, Mike, this may have answered your question. Mike Hayes asked, what can you use the PPP for besides payroll business mortgages?
So if you got the PPP as an employer, then at least 75% has to be for payroll expenses, meaning gross payroll to your employees, state and local payroll taxes, health insurance, and retirement contributions on the employer side. So if you're an employer portion, the PPP has to be at least 75% for that. The other 25%, again, as an employer, can be rent, can be utilities, and can be mortgage interest if you happen to have that instead of rent. If you are self-employed, again, it's your compensation up to $100,000 per business owner for that self-employed thing is really going to be your net profit during that 8-week period. So theoretically, you can use the PPP proceeds for operating your business as long as you have that net profit in that 8-week period to be at least 75% of whatever the loan value was. So if I'm a sole proprietorship, I make $100,000 a year, that kind of thing. The loan would have been for just under $21,000. I'm all by myself, right? So I got a loan for $21,000. During that 8-week period, I better show net profit of at least 75% of that $21,000-ish dollars.
And this is something that your bank will likely because for it to be given, because technically it's a loan right now. Yeah. So your bank comes to you and it's not like this magical pill that it's forgiven. You or your bank will have to do some follow-up to get it forgiven. And if you don't do that follow-up, then your bank comes to you and says, we're collecting. And was it like a 1-year term or a 2-year term? I can't remember.
1% rate, 2-year term.
Yeah.
And then if you don't have it repaid in that 2-year term, the SBA says they will provide options for a 4% 10-year term after that.
Yeah. So.
But you're absolutely right. I mean, a lot of people are like, how do I enter this into my records? I enter it as a deposit into my cash account and it's just, other income, right? And I'm like, no, not yet.
It's a loan. Yeah. You have a loan.
Remember,
don't bury your head in the sand.
Yeah, like Lisa said. Yeah.
What's that, Lisa?
Don't bury your head in the sand.
Oh, ostrich method has killed more small businesses.
Yeah.
Which thank you for saying that, Tim, because I think I listed it as just cash in. I need to go and change that. So thank you for reminding me of that.
It's interesting though. Of the clients that I know that have gotten it, I'm like, hey, let's plan to meet 6 weeks into the 8-week period. We'll review what you've been recording. So if you haven't been recording stuff correctly, then we'll make sure that we adjust it. So you got a little run time before that 8-week period is up. But yeah, track it like your life depended on it. Because if you can get it forgiven, why not?
Right. Be the difference of now taking your new little business that just started and saddling yourself with a ton of debt that you could not. It's going to prohibit you from being successful. So.
Right.
So Mitchell has a follow-up. Thanks for the example. Isn't the loan's purpose to help with a lack of income, though? So if I show no income for that 8 weeks, I will not have any forgiveness?
That's correct. If you got a PPP loan under self-employment and you have no self-employment earnings, then you don't meet that 75% where you have to use the loan for 75% of your expenses, then you would not qualify for the forgiveness portion because you didn't use it for your self-employment earnings. You didn't pay yourself.
Okay, so let me.
So Jared really wants a piece of art.
I'm confused. I do not. No, I do not. The navigator.
you want a small portion payment to your navigator, and it seems to be you don't even have to be in the best industry. So I mean, if you're a realtor and you don't have commission income coming in, and you're still spending that PPP money on your self-employment expenses, I mean, I guess you could say that that's used in your self-employment. That's quote income towards your self-employment earnings using those funds. But again, your lender is going to have ultimate decision-making authority as to whether or not that counts towards, paying yourself.
Okay, so let's use round small numbers. So let's say I get $1,000 in PPP loan money. And so that means I would need, if we're talking about 75%, so I would need to show $750 in payroll expenses.
And again, if you're self-employed, that's net self-employment earnings. If you're on payroll, easy, right?
Right.
So yes, in your example, but the idea of the PPP loan was to get people back to work, to allow them to continue to be productive members of society, as opposed to going on unemployment and things like that. So they want to be able to continue to see that you are productive in your trade or business. If you're an employee, that's easy enough to do. You write a payroll check. Or if you're an employer with employees, that's easy enough to do. You write some payroll checks. If you are self-employed, the measurement stick by the financial institution of how you pay yourself, right? They want you to continue to be employed as opposed to going on to the federal pandemic unemployment assistance or something like that, even if you're self-employed. So they want to be able to show that you have some net self-employment income, that you're really paying yourself as if you would. Even though it's not a payroll check, self-employed persons, they want to be able to see that you're making that net self-employment income.
I think that this is even more proof to pay yourself a salary, or to put yourself on, even if you're putting yourself on a payroll, you can still take a draw.
Yeah.
But this would certainly have made this whole process easier for you if you were on payroll.
Yeah.
Of your business.
So being structured as an LLC where you pay yourself a set amount per month, you would then have that documentation, and it would be obvious prior to this assistance, you were paying yourself $2,500 a month. You continue to pay yourself $2,500 a month, and therefore hopefully satisfying that 75%. Would they potentially, if you were a sole proprietor, would they potentially look back at your tax returns from the year prior and see what your gross income was, and then compare it to what you were choosing to pay yourself from the PPP, thereby kind of substantiating what it is that you have proof that this is how much money I made, and then I'm still working and generating and marketing and doing these things. It's just I'm not closing anything. Right. So I'm not overpaying myself. Would that be something specific to a real estate agent who's running a Schedule C?
Yeah, and when you applied for the PPP as a self-employed person, they were actually asking for the Schedule C from your 2019 return.
Because that's probably how they determined how much you were going to get in the first place.
Yep.
Okay, that makes sense.
And so Mitchell asks, so an owner draw wouldn't make that clear?
In Lisa's example, where it is regular and consistent and that kind of thing, then absolutely. So she said LLC, but LLCs can be kind of taxed as anything. So in her example, LLC taxed as a partnership or LLC taxed as a sole proprietor. Absolutely. If you're taking out that regular owner draw, then absolutely that's documentation. As long as your specific lender, because remember the SBA is super, super overwhelmed. They're relying on those specific lenders to kind of fulfill those, I'll call it underwriting requirements or lender requirements, whatever. So you're absolutely right. So your lenders, much like Lisa said with forbearance, and specific servicers have kind of their own criteria. In this case too, the bank that actually you went through to get that loan is going to have not only the SBA criteria, but their own criteria as to how you meet those requirements for forgiveness.
Right. That makes sense.
So that's a great, I guess, Mitchell, that's a great question for the lender that you're working with. How would they interpret that?
Let's see, what else? Stimulus payments. The IRS updated their website last night. And so some people were having problems with the payment status not available. You know, you enter your information, when am I going to get my $1,200, that kind of thing. It turned out one of the glitches in this really quick tool that they did was that the IRS database most often keeps your address information in capital letters. So the little pro tip, they said, if you're putting it in mixed case or lowercase, it wasn't registering. So
wow.
People are saying that if you go in and you try and input all of your information in capital letters, maybe you can move into the status. And that kind of thing. The Nevada Pandemic Unemployment Assistance. So self-employed people, even today, 5 weeks or 6 weeks into the crisis, self-employed people still cannot get Nevada unemployment. They say that they're going to have a sister site or a mirror site up shortly for people to apply as a self-employed that way, so it doesn't clog up the system to the employees. They say that's coming, but promises. We'll have to see where that happens. We did see that the DETA director stepped down. I can't imagine under what pressure she was. So they named an interim director to manage that. So again, they're still overwhelmed working, 16 to 18 hours a day trying to get that going, even with the extra couple of hundred people. So Lisa's comment about unemployment claims, not only nationally, but here in the state, is absolutely crazy. And hoping to hear something from Governor this afternoon about plans to reopen and what that looks like and that kind of thing, so that all you people who are self-employed can figure out exactly when you can get back to work.
Right.
I'm sorry. Just a real quick question about the stimulus payment. If you now go in and you put, let's say you filed in 2018, you didn't file 2019 before all this happened, and you lived at a different address. So if you go in to try to search yourself, should you go in and put in the address on your 2018 tax return to see where you might be? Okay.
So there's so if you have not otherwise let the IRS know that you moved, there is a form called an 8822B that you can say, "Hey IRS, I've moved," and then that will have the IRS will have that address on file. If you have not done that, most people do not, then the last address that they have on file would be the last tax return that you have, and you should use that 18 address.
Okay, perfect.
And you just have all of those forms memorized, correct?
They're only numbers, Jared. There's only 10 numbers. There's 26 letters.
Got it. Okay.
I love it.
Easy. Well, we're hitting about an hour now. This was our last video in April, our last video of the series. I will be posting a link later on where you can access every single one of these videos if you're curious about more information on stimulus payments or unemployment, our conversation around this, again, forbearance, if you want to dive into that. What is the CARES Act? I have a whole video series on YouTube that I'll share here in the group. Just to wrap it all up, what do you expect to see, Tim, in the next, say, 2 weeks to 30 days? I'm not asking you to use the crystal ball. Just like from your experience, what do you see happening?
So that's a nebulous question. What do I expect to see happening with the economy? What do I expect to see with compliance with the CARES Act? Do I see, so having a little clarity.
Okay, so what do you expect to see as far as, let's go to your expertise as a CPA with the IRS in filing your taxes, or with the compliance with the SBA, or with the future stimulus payments, if there are any?
IRS will continue to be a kindler, gentler IRS like they were in the 2008 issue. There was a lot of forgiveness of penalties and interest as long as you were acting reasonably. Again, going back to all the things that Lisa said too. So if you were doing the things that you kind of could, and I can't pay you, but I'm reaching out and contacting the IRS and either trying to get into a payment plan and that kind of thing. So communication is key if you cannot pay your taxes. It is always better to file and not pay than not file and not pay. Because again, they said, if we don't know about it, we can't work with you to get it done. File as quickly as you can, gather your records. Filing deadlines are all July 15th. You can get an extension out to October 15th or September if you're an entity, corporation or something like that. Keep on doing that. People are going to have a hard time of it in July because if you owed for last year, that payment is due July 15th. If you have a quarterly estimated payment, that is due July 15th. If you have a second quarterly estimated tax payment, which was normally due by June 15th, that's due by July 15th. So theoretically, you could have a year and a half worth of taxes due on one day.
Wow.
So that will be problematic for some people who, again, haven't been paying their taxes all of last year as well. So we'll see. So that's for the IRS. It's going to be great. I think over the next month, businesses are really going to be tightening their belt and finding ways to lean it up. Even if we were completely open tomorrow, people be a lot more judicious in their spending for a period of time. I do a lot of bankruptcy consulting, and the judges for the Western region have all decided that October is going to be the month that they see the tsunami of bankruptcies. And so people who just can't make it, even with the PPP loan, that kind of thing, they expect that this last quarter of 2020 will be the time that starts happening in earnest. But yeah, I mean, when you get these loans, make sure that they're forgiven. Make sure that you're using those funds judiciously so that you can avoid seeing the inside of a bankruptcy court room or talking to a very expensive attorney about how do I get out of this.
Right.
In terms of stimulus, Congress says there's at least one more coming, possibly two more coming. The nature of that is supposed to be helping state and local governments because now they are, in the queue for getting their monies. It will be a lot more politicized because they're already arguing over the terms of what else can they throw in there. So we'll probably see another 2 or 3 weeks from now, we'll see some sort of stimulus for them. And, anybody's guess how that will play into the election in November.
Mm-hmm.
Yeah.
Lisa, what about you? I know you don't have that crystal ball either.
I know I'm gonna have to have Tim send it to me.
Yeah. Do you see what's if we compare this again? If we look at history and we compare to 2007, 8, 9.
Yeah.
How long did it take for us to recover from all of this?
I would say I think that we saw home prices continually rising 2012, 2013 when things started to home prices to rise. So kind of what I'm projecting is, first of all, know that everything, all the indicators, everything is looking like we're going to see interest rates in the low 3s for a very extended period of time, and possibly lower. Once there is a sense of stability, we'll start to see interest rates reflect where the current bond market is. And so if you are currently furloughed and you can't, you can't get a refinance, don't stress about it. When you get back to work, those opportunities will exist. Again, we don't know how the forbearance piece is going to come into play on that. We don't have full answers for that yet, but we'll get that information. Everything that I read and I talk to, and I have access to some amazing people, business owners, mortgage company owners throughout the country as part of my coaching group. Everyone feels that real estate is really going to be the leader in pulling us out of this, that there still exists a shortage of homes. With interest rates this low, you're opening it back up to first-time home buyers again. because their payments are going to be so much less. And there's a huge difference between a 3% and a 4.5%. You're talking about a $300 or $400 a month in your payment. And so it kind of opens that doors for those buyers to be able to come back in on those entry level homes. The reality of the situation is, I've been stuck here at home for 6 weeks. I'm like, do I really want to have an acre of land? Is this really something that we want and need? Or, my house really isn't big enough for, my huge family, or wow, with interest rates this low, and, if I can time it right, well, things are a little bit flat. The market hasn't really dropped. I don't anticipate seeing it. We're not going to say right here, I do not see like home values dropping 50% like they did. We may see a little bit of a dip, but I really believe that real estate is going to kind of lead us out of this whole situation. So if you have a situation where people are like, well, my gosh, now I can buy my dream home because my payment isn't that much more because my interest rate is so low. So, there's a lot of ways that we're going to kind of come out of it. And that's kind of what I'm anticipating and seeing just by talking to clients and kind of where they're at. They're either going to stay where they are and they're going to take advantage of these interest rates. And, we're locking people in at 3% and, and lower, depending on what they want to buy down for discount points now. So it's, I think there's a great opportunity there. And again, it's that fact that this is external, not internal, coming from the real estate industry.
Yeah, I think watch people, they are going to want to find ways to make their home more comfortable than ever, because there's some concerns about going to venues with lots of people, going to the movies, going to the casino, going to the restaurants. In my industry, we're getting text messages all the time like, wow, my stuff is really kind of crappy. I realize now that I've spent the last 6 weeks in my home that this couch is disgusting. It's time for something new. So I think that people will be spending their money when we got it again on their home and how to make it nicer. So I think we're well positioned.
Yeah. The boat maybe is not as important, that new kitchen. The thing that we do, we live in our homes for 14 years and then all of a sudden we decide to sell it and then we fix up the kitchen and move. Right. So, we're all guilty of that. You stand in front of Lowe's or Home Depot, you can, people are taking advantage of doing this. We're doing a lot more cash out refinances because people are choosing to stay in their homes and making the homes the way that they want them to be. I think that that's a great point from an emotional level. I think one of the things that this has taught all of us is that you kind of are kind of sheltering in place, and this is kind of halftime and halftime in your life, halftime in the situation, but what's really important to you and what can we truly live without? And I think that there's going to be a shift.
Guys, thank you so much. We've had a great time in April. Let's put something together maybe in May when we have some more information and as the things change constantly every day with everything. Tim, Lisa, thank you. You guys, if you're looking for a great CPA, if you're looking for a great lender, you've got two of the best right here. So thank you guys. I very much appreciate it.
Thank you, Jared. It's been fabulous working with you guys.
Agreed. Wonderful technology wizard right there.
This would not have happened without Jared, believe us.
Thank you, guys. We'll talk to you soon.
Okay.
Bye-bye.